Wealth Management video blog. Today is Wednesday, September 21st, and I'm Lee Seiler. Thanks for joining. And, I want to just talk about real quick about what we've seen over the last couple of weeks. Now, the markets in general are lower than where they were 2 weeks ago. We had the bad day on a Friday, 2 Fridays ago. Last week, we were up slightly and certainly did not take back what the market gave a few weeks ago. And this week, we're very sluggish. And the reason is a lot of indecisiveness, and part of that is the Fed meeting. The Fed started its FOMC meeting, the Federal Open Market Committee meeting, yesterday. It will conclude today, and we will have a decision on interest rates at around 2:15 this afternoon. Now, there's we'll call it Oddsmakers for interest rates, and that is the Fed funds futures. Now, Oddsmakers had about a 50-50 shot a couple of weeks ago that the Fed would raise rates in the September meeting. Now those odds have dropped a little bit because there's been some data and economic information out there that is stating, you probably shouldn't raise rates right now. So here's what we're going to see. We probably will see the Fed hold at the current interest rate, but will change language a little bit and giving us more information saying that, rates will probably rise and we'll raise them in December, in the December meeting, probably. And I think that who knows? They could surprise us. Nobody really knows. Like I said, it was 50-50, and now it's less than about 20-30% chance they raise in this meeting. However, a lot of people are saying it's political and that they do not want to raise rates before the election. I think that the election should have no bearing on interest rates. If they need to go up, they need to go up. And quite frankly, we're sitting here at a really low interest rate. I think rates should go up. And, I think that you need to get it over with right now, rip the Band-Aid off, and let's move forward. And then we'll focus on the election. So we'll see what happens. 2:15 this afternoon. A lot of other news regarding Wells Fargo, WFC, that trades on New York Stock Exchange. Of course, Wells Fargo defrauded about 115,000 customers and made up fictitious accounts or actually unauthorized accounts so they can get their bonuses and ended up being about an average of $25 fees per. They've given all that back. But the CEO was under fire yesterday. And, quite frankly, I think that it is going to hurt Wells Fargo. And I think that the stock, and we do not own it, we did sell our stock. I think the stock's going to be in a little bit of trouble short term. And quite frankly, I was in a Wells Fargo branch 2 days ago. There's a lot of people in there. So I asked somebody, I said, are they closing accounts? I said, well, no, but who knows? Bottom line is, you want to believe that you can trust your bank. And if you bank at Wells Fargo, now all of a sudden you're second-guessing your decision of being with Wells Fargo. I don't think it's going to affect their mortgage business. I think it's going to affect their people that, your mom and pops that bank at Wells Fargo. I think somebody will say, you know what, I don't like what they did, and just protest, move their account somewhere else. So we'll see how that plays out. But, the CEO in the hearing, they were asking him, have you taken any pay cuts? Have you fired any high-level management? And none of that has happened. They fired 5,300 people, but they were the lower level, the just branch manager type and actual employee, the account manager type people. So we'll see. The government's going to get to the bottom of it. I think it's going to. And of course, one side of the aisle is saying we need more regulation, and the other side of the aisle is saying that's not what we need. I don't think regulation would have prevented this. Just like I don't think a new president, whoever this president could be, or a different administration could have prevented all these terrorist acts. I think that maybe things done 4 to 8 years ago possibly could have helped, but you're not going to prevent some psychopath from putting a pressure cooker in a metropolitan area. So anyway, that being said, I still am really cautious about the market. I look at technically on the stocks right now. I look at the S&P, the Dow, and the NASDAQ. And on a technical basis, meaning the charts, there's a support line, and support really is where the market or a stock will hit and say, the buyers come in there, so it doesn't seem to want to go lower than that. Well, in the market's case, we look at things like the 50-day moving average, which is the average price of the market over the last 50 days. And when stocks or indexes, like I'm talking about, trade below that 50-day moving average, typically a bearish signal. So we've been trading below the 50-day moving average really for several weeks now. So the concern is normally when it stays below that 50-day moving average, it doesn't seem to want to get above it. You probably have another leg lower. And I see another leg lower in markets here very, very soon. September is typically the worst month of the year Yes, we're down in September so far, but not as volatile or not as bad as that I thought it would be. October is not really a great month either, but typically markets seem to bottom in October. Of course, this is an election year, so all bets are off. We don't know what's going to happen, but we'll see what happens with the Fed today. That'll have a lot to do with how markets will perform over the next few days. If we can help you out with those 529 plans, we get a lot of people coming in and talking about that. So that's great. You're starting to save. You're realizing that it's going to cost you $130,000 to put a kid through 4 years of a state school. So also, our financial planning, your IRA accounts, we're getting a lot of those people coming in. Hey, will you please take a look at my IRA accounts and see if it's allocated the way it should be based on what my risk tolerance is. That's critical. But anyway, so get a hold of us if you need us. I'm Lee Seiler, Seiler Wealth Management. The markets are indicating a slightly higher open today. We'll see what happens. We will open in about 33 minutes. Fed decision at 2:15. We'll see how it plays out. I'll come back to you the next day or so. You guys have a great day.